Hello everyone, welcome to a new video for HBAR price prediction based on Elliott wave analysis. Starting on the daily chart here, we're gonna start between the bullish and the bearish scenarios, of course. With a quick overview, we have 1, 2, 3, 4, and a 5 finishing wave A or a wave 1 here. After both case scenario, you would like to seek after 3 corrective wave. In this case, we have kind of like an impulse, or it can be, of course, as well an A, B, and a C. However, we are looking for a corrective wave, meaning if we are in a zigzag, you would like to seek after A, B, and a C. Your wave C has to be kind of an impulse. However, this impulse did not reach even the bottom, but still can be much more than considered as ABC as well, truncated. And in this case scenario, it can be, of course, that you have finished wave B or a wave 2 and you're looking for higher prices. And here we go, a very massive impulse toward the upside. Probably formation of a wave 1. We're gonna check, of course, internally if we have finished this impulse or not, or we are heading for lower. So in this case scenario, you are in a wave A, B, and a C. Your wave C has to hit, of course, the 1-to-1 fib level at 0.60 cent, where you would like to hit it, of course, as a 1, 2, 3, 4, and a 5. Now this, of course, as an impulse is a very, very big, unless we still have one more wave toward the upside to finish a 1-to-1 fib level for a wave C in the blue scenario. In your yellow scenario, you are in a bigger 1, 2, 3, 4, and a 5 impulse toward the upside, meaning this is only a 1, 2 formation of 3, 4, and a 5 for your yellow scenario, and then 4 and a 5 for higher prices. So both case scenarios, of course, are impulsive and looking for higher prices. However, your yellow scenario would like, of course, to reach much, much more higher than your blue count, which is very close to be finished. However, if we have a still bearish scenario, your bearish scenario can start exactly from these 3 ways toward the downside, where you have finished a W and probably your X is a big wave to like 3 waves, which it didn't took the high yet. It can be a running flat for an X, which is very, very characteristic for a wave X, and probably another structure for your wave Y toward the downside, meaning W, X, and a Y. Very, very possible. Your wave Y can finish, of course, in a zigzag, can finish in a flat, or it can finish in a triangle sideways ranging. Now let's take a look for the bullish scenarios, which are higher possibility here than the bearish, of course, if we have finished for this impulse toward the upside, where we have 1, 2 probably, and 3, 4, 5. It can be even taken here as a 1, 2, 3, 4, and a 5. Your wave 1 can be finished, I would say, or it can be extended. You probably have double 1, 2s probably, and then 3, 4, 5, and then 4 and a 5. So very, very possible scenario, because we are looking at a correction here and not to an impulse yet. And as you can see, we have 3 ways down for your A, 3 ways up for your B, taking the high even, and not impulsive. And it's a 3 wave, right? It's not a part of this impulse, let's say 1, 2, 3, 4, and a 5, because of course 3 waves, and it has to be impulsive in case it is a wave 5. And we're looking for one more wave toward the downside, and this still, of course, a correction. Now your target for this expanding flat as A, B, and a C are given between the 1.38 and 1.618. Right? We have already reached it with a very massive move drop toward the downside. However, this drop was not, of course, finished yet, because the structure here of this wave C is a triple 1, 2. You have 1, 2, 1, 2, 1, 2, 3, 4, not invalidated, and then 5, 5, and a 5. So because probably we're gonna, of course, move a little bit much more down, of course, for this wave. And don't forget that we are still, of course, in a very massive impulse toward the upside. Your target for a wave 4, anyway, let's see the confluence here for the wave 4. The 0.38 has been reached already, but you still have open 0.5. So if we have here the perfect fib levels for a wave 4, we have the 0.38 already hit, and we're still looking for the next one, which is 0.5, which it can be in confluence probably, yeah, and after 1112s here, looking for 4.5, probably in between, yeah, so probably. So let's move inside it a little bit here, and let's see what do we have, of course. Let's label a little bit here the counting. It would be nicer, I think, for you guys. So let's do this a little bit here as a 1, 2, 3, 4, and a 5. So the wave 5, this is your least counting, the smallest one. And then we have another 1, 2 here, as you can see, 1, 2, 3, 4, and a 5. This is, of course, your white count, a little bit bigger. And your last count is in the yellow, 1, 2, 3, 4, and a 5. This is your yellow count. So yeah, a little bit bearish, of course, short-term bearish. We need lower prices, guys. It's, I mean, look at the extended wave toward the upside. Yeah, so it might need, of course, some correction, some deep correction to, of course, say that we are, yeah, ready to move for higher. Now, if we move for lower, I mean, your invalidation point, look where it is. This is your invalidation point, which is at 0.786. Well, this is massive, yeah, like very, very far. And we cannot wait, of course, for anyway, because if you get invalidation in this area, um, yeah, I mean, you have to consider that you have finished a bull, impulse, a bullish impulse, meaning we can come back to this idea where we have 1, 2, 3, 4, 5 finished, and not considering this is as double 1, 2. So 1, 2, 3, 4, and a 5, and then ABC. But this wave C is massive, a very, very massive. That is a very big one, which is very, very low possibility, guys. I believe that this 1, 2, 1, 2s, triple 1, 2s is gonna finish somewhere here, 0.5 maximum, and then of course moving toward the upside continuation, probably for a wave 5, and yeah, maybe correction again, and then impulsive and explosive toward the upside for a wave 3. So these were yeah, the insights for HBAR. Thank you for watching. Thank you for your likes and comments. See you in the next one. Bye bye.